Hey, in this video, I'm going to be talking about taxes and your retirement. Hey, welcome to this episode of Black Wealthy and Wise, the number one podcast for helping Black families escape financial slavery and create financial freedom so you can live your best life and leave a legacy for your family. I'm your host, Alex Jones. So, today, guys, I'm going to be talking about taxes. That's the old subject. Nobody likes taxes, right? I'm going to be talking about taxes and your retirement. I don't know if you guys have paid any attention or not. During the Obama administration, when it comes to national debt, we know that the amount of debt the country has, taxes have to be collected to help take care of the operating budget and to pay the debt. So we know during the Obama years, during his 8 years in office, he added $9 trillion to the overall debt. And in Trump's administration, he actually added $8 trillion over his 4 years. He added $8 trillion to the national debt for 4 years. Obama added $9 trillion over 8 years. So the national debt currently stands at $30 trillion. And let me tell you, man, that's a lot of money. And so we know when you owe as much as $30 trillion in debt, we know the country is going to have to do something about what? Bringing in some more money. And what does that mean? More taxes. So let me tell you, over the next few years going forward, you can bet between now and the time you retire, tax rates will more than likely be going up. All right. So now you may be wondering, what does that mean for you? So let's take a look. If you happen to have your retirement money sitting in what's called a tax advantage savings account, which is your IRAs, your 401ks, your 403bs, your TSPs. If you happen to be self employed and you contribute to a SEP plan, these are all considered tax advantaged plans, which means the monies that you contribute to those plans now are monies you can defer the taxes on the money that you contribute now. That money is invested, okay? And then once you reach 59 and a half, you're able to start pulling monies out without penalty. Once you start pulling money out after you reach 59 and a half without penalty, you still have to pay the taxes on that money. Okay. And therein lies the problem. So if you think that taxes are going to be higher in the future than they are now, then here are a couple of things that you might want to take a look at or you might want to consider. Number one, you may want to consider how much more money you're actually contributing to these tax advantage plans. So, if all of your retirement savings are being put into these tax advantage savings, retirement savings accounts, if all of your money is being put into these accounts, a couple of things happens. Number one, what if you need the money before you reach 59 and a half? Okay, that is something to consider. But obviously, number two, if you think taxes are going to be going up, that means that you are more than likely to have a higher tax bill once you retire. So the key is to think about, maybe you might want to start looking at diversifying how you save for your retirement. Okay. So one of the things you might do is you might say, all right, I am only going to contribute up to my company's match. If your company happens to match what you contribute, then you definitely want to make sure that you match fully so you can make sure you get that free money from your employer, right? So you don't want to leave money on the table. But over that amount, you might start looking at investing or putting that money away in a different way. One of some of the ways that you might want to consider is you might want to consider doing a Roth IRA or a Roth 401k. Now, we know the difference between the tax advantage plans. Those things mean whatever you contribute, that money can be written off on your taxes and you will pay taxes later. With the Roth IRA and the Roth 401k, or even some of your taxable brokerage accounts, now you're contributing after tax dollars, okay, which means the money is already taxed. It goes into whatever investment it's going to be invested in, and then it's going to grow tax free. You don't have to worry about paying tax on that money. All right. So you might want to think about, maybe I just contribute up to my company's match, and then I start putting monies aside into a Roth 401k or a Roth IRA, in order that I might be able to make sure that I don't have this huge tax bill coming down the road in the future, right? That may be something that you might want to consider. Another thing you might want to consider, just maybe, you might want to consider doing what's called a Roth conversion, which is where you take some of the money from your tax qualified plan, okay? Where you consider taking some of the money from your IRA, 401k, 403b, and you consider taking some of that money out and converting it to some type of Roth. And in that instance, you would actually pay the taxes right now. And now, by you paying the taxes on the money that's converted, now you don't have to worry about paying taxes on those dollars going forward in the future. So, again, it's something to consider. And finally, one other thing that you may want to consider, which a lot of people don't quite realize or don't understand, is you might want to consider looking at your cash value life insurance policy. Well, Alex, I thought life insurance is just for burying people, or it's just for death benefit. No, it is not. Most people misunderstand what life insurance is all about. Life insurance is actually for the living. And so there are smart ways that you can actually use life insurance while you are alive, and in a way that helps you to build wealth. So, for instance, if you have a life insurance policy, and all of these things are going to be based on each individual person, you want to make sure that you get a well structured life insurance policy that allows you to build up cash value. Now, what does that mean? Part of your premium goes to pay for the cost of insurance, and the other portion of your insurance goes to a savings account. Now, the difference about this is, and there are several different accounts, several different types of policies where this money can be put into different types of savings accounts. But there is one called an IUL that you could take a look at, and IUL stands for Index Universal Life Insurance. And in that instance, the cash value associated with your savings account is actually based on the stock market. Okay. And so if you when your stock market goes up 10%, 12, 15%, you actually receive that type of return on the monies that you have invested or have in your cash value savings account. Beautiful thing, right? Now, here's the great thing about it. Any monies that you pull out of the policy, guess what? that money is tax free. Any death benefit that is paid out is tax free. And there are also ways that the cash value that's built up in your policy can actually be used for any number of purposes tax free. So the question becomes, do you want to pay taxes now? Do you want to pay it later? Or do you want to pay it never? Based on how you want to do it, there are several different ways that you can go about doing it. If you want to learn more about it, please feel free to email me. I love to talk to you about all the different options that you have available for you. But the important thing for you to note is if in fact you believe, which I strongly believe, that taxes will be going up between now and the time you retire, you certainly want to start thinking about how you are going to minimize your tax liability. And finally, the other thing, and I'll probably do a different segment on this, where I talk about taxes and your Social Security. So, if you happen to currently, if you're not saving for your retirement right now as we speak, then I strongly encourage you to get in contact with me. Social Security is likely to be restructured if it is around by the time you retire. It's definitely, probably, more than likely going to wind up paying out lesser benefits going forward in the future because, quite frankly, there's just not as much money coming in. We have high national debt. And again, unless taxes go up, we won't be able to pay out all the benefits associated with Social Security. In any case, I'd love to hear your comments, your questions. Please feel free to inbox me or email me. As always, if you want to have a clear understanding and perspective as to where you are overall in your finances, there's a link below, alexbjones.com/fitness, where you can take a 5-minute self assessment and it will give you powerful insight as to where you are with your finances right now. So, as always, love to hear your questions and comments, and I'll see you on the next episode. Take care. God bless.